Thank you, guys. So again, I'll just brief about the previous class. We spoke about types of orders and what is the tick size, liquidity, impact cost. Basically, we have covered the basic points of a secondary market, right? So in this class, we are going to talk about remaining topics related to the secondary market. So we missed to discuss about auction market. So first, we'll start with the auction market. So what is meant by auction market? What is the purpose of having this auction market? We will see. Suppose, keep it on mute. Someone is talking. Yeah, there is always some liability obligations towards the buyer and seller. If I'm doing some trading in the stock market, it can be buying or selling any shares. As a buyer, I have an obligation to deliver my cash by evening. I have to pay my cash by evening. Similarly, as a seller, I have an obligation to deliver my securities by evening to the broker or stock exchange or somewhere. So is obligation means the entire shares are holding in a broker only. If I'm holding a demat account with some Zerodha or something XYZ brokerage company, if I'm holding this demat account. So this again, this demat account, I mean this brokerage, this XYZ brokerage app will also have an account with the stock exchange. They will maintain direct account with stock exchanges. So as a user, end user, I'll be giving instructions to this broker. So broker should perform the, I mean, should complete the transactions with the stock exchange on behalf of the user. I mean, on behalf of the client or customer. Suppose if broker fails to deliver the shares to the stock exchange, because stock exchange other side also there will be another party, right? Suppose from this side there is a buyer. From this side, let's assume we are buying the share. Let me merge it. So this side from the buying. If I user, if I'm having an account with XYZ app as a brokerage app to buy the securities, from the other side also seller will have another brokerage account with another broker, right? Let's say they're also having an account with the ABC app, and that side is there like Satish is there, who is selling the securities. So when they are selling the securities, they have to deliver the shares to XYZ app, or from XYZ app to the user will get shares in his demat account. This is how the process will work. As a middleman, the stock exchange is there. So through the stock exchange only, these both brokers will execute the trade. This is how the buying and selling transactions will happen. Suppose if ABC app, this brokerage company, not able to deliver shares to the stock exchange, that's we call as a bad delivery. Bad delivery means if any stock exchange, if the market is, I mean, if anyone buying the shares and if anyone selling the shares, if you're not able to deliver the securities on time to the stock exchange, so stock exchange will purchase shares on behalf of this ABC group and they will deliver shares to the buyer. Because this ABC company is doing default. So stock exchange has to buy a share on behalf of this ABC company and they have to deliver shares to the XYZ company. So where they will purchase this company, I mean stock exchange, where they have to purchase the shares, they will go to the auction market. So in the auction market, they can purchase the shares and they can sell it to the buyer on behalf of this other broker side. So the stock exchange will go to an auction market. In the auction market, they will purchase the shares. So basically, stock exchange will go for the auction market, auction price. In the auction market, other participants will also come who are ready to sell the securities. As it is an auction market, definitely the prices will be a bit higher than the market price. Because I mean, the reason why we are there purchasing the auction market is it is because of the bad delivery. When shares are marked as a bad delivery by the receiving party, they have to return by the delivering broker. They return to the delivering broker. So obviously, as an exchange middleman, they have to deliver the securities to the buyer. So what they will do, they will purchase the securities on behalf of the seller and they will give it to the buyer. But for doing all this auction market and also performing these transactions completed, the stock exchange will levy some penalties on the ABC app also. You know why? Why they will levy some charges, penalties?
Because of the negligence or whatever it is.
Could be anything. It may be technical glitch or whatever in their system. The broker defaulted.
Yes.
So exchange will levy penalties to the broker. Suppose if it is any default from the user itself, from the Satish itself, they don't have any shares, they did some short selling or something, They have no any shares to deliver. In that case, what they will do? Stock exchange will levy penalties to the ABC, which is the brokerage company. Again, the brokerage company will forward those. They will simply transfer their penalties to the user, customer. This is the purpose of having auction market. Only few selected brokers are allowed to trade in this auction market. Doesn't mean that we can also go to the auction market. We can sell some shares to the stock exchange higher than the market price. Not like that. Only the selected brokers are allowed to trade on this auction market. Auction market price always will be bit higher than the normal market prices. But because by end of the day, definitely they have to deliver the shares to the buyer, right? As a stock exchange, as a middleman. So they cannot become a defaulters like ABC brokerage app. For that reason, they will go to auction market. In the auction market, many sellers will come. They will purchase at the possible prices and they will deliver it to the buyer. This is called auction market. Everyone understand? Yeah. Everyone understood or not?
Yes, sir.
Yes, sir.
Then we'll
Yes,
talk
Mahesh.
about Sensex. What is this Sensex? From childhood onwards, we are like confusion on the Sensex, Nifty 50. Do you guys have a similar kind of confusion? I remember when I was studying intermediate also, I used to heard about this word Sensex, Nifty points, Sensex points in the news channels. We have UTV news, right, at 10 o'clock. So every day they used to explain about like there is a 200 points increase, 150 points downfall in Sensex points. So I was wondering and I was not able to get into that Sensex points, how actually it will calculate and all. Even after completing my graduation, when I was in CA also, I was not able to figure it out how exactly this Sensex will work on that. But once I started studying about this investment banking concepts and fund accounting, then I came to know the clear picture of our Sensex. I'll try to give you as much as possible the clarity for you guys. Basically, first we will understand the index. Index is nothing but some measurement point. Suppose if you want to measure one any performance, we need to get some what do you say standard benchmark, right? Suppose if you want to say like this candidate is a pass or fail, how we will say pass or fail? There will be some benchmark, right? We will consider as 35 marks or 40 marks. Above 35, we will consider it as a pass. Below 35, we will consider this as a fail. So what is the benchmark here? 35 marks is a benchmark, right? So if you want to perform, even if you want to measure the performance of students, we are considering 35 marks as a pass or fail. Suppose if you want to measure the performance of students like A grade or B grade, again some other benchmarks will be there. Correct or not?
Yes, Mahesh. Yes.
Are you guys
Yes,
getting
Mahesh. Yes, Mahesh.
what the
Yes,
benchmark?
Mahesh.
Similarly,
Yes.
if you want to measure the performance of any stock in the stock market, we need that statistical measurement point. First, we need to get that measurement point. So that measurement point is nothing but an index. Each stock exchange will have an index, separate index. Not only one index, many indexes will be there. But popularly in India, we have a Sensex. Sensex is for the BSE, Bombay Stock Exchange. Similarly, we have Nifty 50. You might have heard about this one as well. Sensex, Nifty 50. Heard about it? Nifty 50. Bank Nifty. You have many indexes. So Sensex is basically for the BSE, Bombay Stock Exchange. And Nifty is for the which
National
one?
Stock Exchange.
NSE, National Stock Exchange. We have two major stock exchanges, right? NSE and BSE. Sensex is for the BSE and Nifty is for the
NSE.
NSE. These are the major stock indexes we have. So first we will understand Sensex. You know what happened with this Sensex? As we discussed, it is a statistical measurement point. Normally that will represent the value of a section. Suppose if I'm choosing one type of stock, one industry stock. If I choose that specific index, maybe I can measure the performance of the specific industry. If I choose the steel industry, otherwise if I choose the FMCG, otherwise if I choose the banking sector, by having that banking index, easily I can measure whether banking industry stocks are performing well or not. I can assume. I can come to the justification. For that reason, to understand the performance of each stock, we have these indexes. How they will calculate these indexes? Suppose we have many stocks, many companies in the stock exchange. We have many number of stocks from banking sector, from FMCG, from manufacturing sector, from health industry, from IT companies. We have many companies, right? How they will calculate this Sensex? Will they consider the entire companies? No. So basically, to calculate this Sensex, they will consider only 30 companies. For Sensex calculation, they will consider only 30 companies. How many companies they will consider?
30.
30 companies.
How they will represent these 30 companies? Normally, the largest and most financially sound companies. Again, from the different categories, not from the banking sector, not from the FMCG, not from the health industry, not like that. The 30 companies may include from different industries. It will be a combination of different category of industry and different stocks. It can be mid cap, small cap, large cap based on the market capitalization. They will take these 30 companies. With these 30 companies, definitely we can represent the health of a stock market, or we can see the actual position of a stock market we can represent with these 30 companies. In such a way, they will select all these 30 companies. So by selecting these 30 companies, they will start analyzing, they will calculate this Sensex. Now we will see in a basic simple example how they guys will calculate this Sensex. Even before going to that calculation part, we will understand few more technical terms, why we need this uses of Sensex, why we need this Sensex. The first one is benchmark. Already we are talking about a benchmark, right? As a standard index. Standard means there should be some benchmark to evaluate the performance of individual portfolios, or maybe the mutual funds, or any as a fund manager, as an investor. If you want to measure the performance of any fund, if you want to achieve the higher returns, we need to have a benchmark. For that reason, we have to measure this. We have to consider this index points. Basically, they are the, I mean, to know about the market performance. The market is performing well or not. If you want to know that, we need a benchmark. So benchmark is nothing but this index. Based on this index, we can come to know whether the performance is good or not. That's the purpose of having stock market indices. And we have economic indicator also. As an economic indicator also, we'll use this as a stock exchange. Economic indicator. See, these points, we have index points, right? For Sensex point, Nifty points. There will be points for every indexes. So basically, it will indicate the economic health of a region, a sector, even the country also. If I want to talk about the sectoral performance, based on the points, based on the index points of the specific sector, I can see whether it's a rising index, is it improving the investor confidence, or is it declining the index, which is again trouble to the economic situation. Like that, I can analyze the economic indicator. I mean, I can analyze the economic situation of a country or even sector also, or in particular region also I can consider. For that reason, we use these indexes. And the most important thing is ETFs. We'll talk about ETFs also, but normally as an investment vehicle. Let's keep it as the most simple. Investment vehicle. You know what is investment vehicle? We have mutual funds, right? Mutual funds, ETFs. You guys heard about it. What is mutual funds? In the beginning session itself we spoke about mutual funds.
Yes,
Mutual funds are nothing but the persons who are not able to do trading because of lack of knowledge or something. If they can go and invest into the mutual funds by contributing 5,000, 10,000 monthly or something, they will do trading on behalf of you. For doing all this trading, they will charge some fees as well from you. And after 10 years or 5 years, there will be gains and returns will be distributed to the investors. That's how normally mutual funds work. In a layman terms, if you want me to explain, that's how we can communicate, right? So the mutual funds also, if they want to
stock exchange.
stop.
Menu to stock exchange.
Not getting the point now. Please come again. Manager,
Mutual funds.
your
How
voice.
to invest normal people in shares?
So you're asking a question like how to invest normal people in the stock exchange.
Mutual funds.
Yeah. If you do not have a knowledge on the stock market to invest directly, then we can approach the mutual funds, because mutual funds will hire managers, investment managers. They have a professionals, so they will do the trading. They will invest into the equities. They will purchase the bonds. They will purchase the land. A lot of investments will be doing. and they will generate some revenue as well on that investments. Because if you and me won't go and do some trading in the stock market, definitely we'll end up with losses only. Because we do not have that much knowledge. For that reason, what these mutual funds will do, they will hire some highly qualified and highly experienced candidates for doing and managing all these funds. So they will do the investments on behalf of you, where to invest, how much they have to invest, when they have to exit from the market, everything they will know. So they will do the trading so that we can get some profits as well. For generating profits for our investments and our cash balances, they will charge some fees as well. We call it as a management fee. Again, when we are going to talk about fund accounting, then we will talk about mutual funds, private equity, and hedge funds. Okay. So we call it as an investment vehicle. So in this investment vehicle, if you want to measure the performance of any specific mutual fund, or if you want to track the performance of any mutual fund before going and investing, we can use these indexes. Suppose there is a mutual fund which is investing only in a bank nifty. Simply you can go and check the mutual bank nifty indices. If it is performing well, you can go and directly invest into the mutual funds. Again, you don't need to do a lot of invest, a lot of research, a lot of technical work. You can just measure this. You can just observe this indexes of bank only, bank nifty, so that easily you will come to know. For that reason, this investments of investment vehicle algo will come. Will help you a lot for the investors who want to purchase this mutual funds related to the specific indexes. They can use these indexes. That's the purpose of having this stock market indexes. Okay. Now we will see how to calculate this Sensex points. Now, the Sensex points to calculate from PSU to NSE is a bit different. I'm not sure about the NSE part, how they will calculate Nifty 50, but I'm pretty much sure about the Sensex calculations. Once again. Yeah. So let's talk about Sensex calculation. How these guys will calculate the Sensex. There is a formula to calculate the Sensex. Can anyone tell me the formula? Do you guys know about it? How Sensex will be calculated? We spoke, right? 30 companies will be selected. So free float market capitalization cap of 30 companies divided by base market cap of 30 companies. Sorry. Base index. This is the formula, guys. You calculate Sensex. This is the formula. Free float market capitalization of 30 companies. We said, right, we choose 30 companies only. So we'll take top 30 companies market capitalization, and base period market capitalization also will be there. So that will be considered, and into base index value will be considered. Okay. Now we will discuss one by one. What is the free market capitalization? In the first day, we spoke about one thing: promoters holding and public holding. Do you guys remember? Promoter shareholding, public shareholding,
Yeah.
minimum shareholding norms.
Yes.
Are you guys remembering?
Yes.
Yes, Mahesh.
Yes, Mahesh.
So what is the minimum shareholding norms for the public and promoters?
For promoters, 75%.
Yeah, promoters should not have a more than 75%.
More than 75%.
That
and
means
public
at least
20.
25% should be available for the public. That's the minimum
Yes.
shareholding norms, right? Similarly, for every company, there will be promoters holding as well as the public holding. There will be shares available for the public, and there will be shares available and holding by the promoter as well. Promoter is nothing but the key managerial persons, or maybe the founders, CEOs will have some holdings. That is called promoters holding. As a owner, they will hold their shares in their pocket, and remaining will be issued to the public. So whatever the shares available for the public, that is called a free float market capitalization. The value of shares that are available for the public trading. The current market, again, it's not face value. The market value of shares available for the public to do trading. That value we call it as free float market capitalization. So we'll take 30 companies. For the 30 companies, the market capitalization, the market cap of free float market cap will be considered. That is called free float market capitalization of 30 companies. And base period. Base period of market cap. Normally in the year 78, 79, somewhere the Sensex points started calculating for India. So they will take the base points as 100. Normally, it's always 100. Base index value is always 100. It has been determined every year. Any time if you want to calculate this Sensex, we use this as a 100 only. Base point, base period market capitalization is 100 only. That's a reference point, starting stage of stock market. And base period market capitalization. Yeah, base index is a 100 only. And base period market capitalization. For every stock, there will be a base period market capitalization as well. So in this base period market capitalization, normally when they started initially, there will be a base period market capitalization as well. In the 78 to 79 somewhere, there would be a market capitalization for that specific company. That will also be considered, so that we can determine the Sensex value. If anyone wants to try to calculate the Sensex, you guys can consider it. Just give me a reminder at the end of the session. I'll show you how to take this free float market capitalization and base market capitalization. I'll show you. These values are available in the stock market itself. NSE and BSE website, you can find these two values. I'll show you. Okay. But using this formula, we can calculate the Sensex. I hope everyone is clear with this Sensex calculation part. You may get a question from the interviewer as well. What is Sensex? What is the benchmark? On how we will calculate this and all. That time you cannot be a blank, right? That's why I'm just informing this point as well. Is everyone good with this point? Everyone?
Yes, Mahesh.
Okay. And the next topic is why BSE and NSE points are different. The major difference is Nifty 50 is an index where they will consider 50 companies. But BSE is considering only 30 companies. There is a one reason. I mean, the BSE sensing includes only 30 stocks, right? That is considered as the largest, most actively traded stocks. Similarly, Nifty 50 also will consider the 50 companies. It will consist of 50 stocks that are among the largest and most liquid than Indian stock exchange. This kind of category they will follow. That is one thing. The calculation methodology also. The Sensex, just now we spoke, right? Free float market capitalization, weighted method will be considered. Maybe the calculation method will be a bit different in stock exchange to stock exchange, Sensex to, index to index also. That would be also the reason. And one more reason is the coverage area. We spoke, right? Though BS is a older one, the biggest one is NSE only. NSE have a higher trading values. So which is obviously contributing more significant price changes in the stock exchanges. That's why there will always there will be changing of Nifty 50 more dynamically than BSE Sensex. That is also the most valid reason. And what else we have? In terms of listing also, obviously the listed companies are more in the NSE, the market cap is more in the NSE. BSE is not that much bigger one when we compare with the NSE. That's why there is always different points in the BSE and NSE, though it is related to same country and same stock exchange something. Same country, same region. The points may be a bit different from index to index because of coverage and all these reasons. Understood? Everyone?
Yes, Mahesh.
Yeah. The next one is the double trading. Double trading in gray market. Gray market is something related to IPO, primary market, but we'll talk about this, double trading. You guys heard about it, bucketing, double trading. Only in India we have these words. Indian stock exchange, not available in other countries. Heard about
Illegal
it?
and unregulated form of trading in securities.
Sorry?
Double market is an illegal and unregulated form of trading in securities.
Yeah. Basically, if you're purchasing the shares, we have to pay some transaction cost, security transaction cost. It's like a type of tax actually. So if you are doing some trading in the stock exchange, we have to pay some taxes and transaction cost as well, right? So in order to avoid that charges, we can do the trading with the brokers. Brokers in the sense they are not like a regulated and registered brokers. They are like an illegal practice. Illegal brokers. We call it as off exchange trading also, because we have a stock exchange. Parallelly, they will also run some unauthorized brokers also. What they will do, basically, I can purchase the trades, I can sell the shares using this double trading also. But there won't be delivering of shares or something. It is just like a betting app. How the betting will happen? We'll do normal IPL betting also, right? This guy will score this much score or something. this team will get this much score. What will happen if they are not scoring, if they are not getting that much score? What will happen? We will lose and we have to pay that money, right? Whatever the bet amount we have to pay. Similarly, in the
It is
Dabba
like
trading also same thing.
simulation kind of thing, right?
Yeah. What I'll do, I'll purchase share. Let's say like I'll purchase one share which is cost of 500 rupees. Again, this share is available in the stock market also. We'll take one stock market reference. Let's say the NSE only. This NSE, this particular stock, the particular security is trading at 500 rupees. So I'll purchase this one security from the unauthorized broker from Dabba Trading. I purchased this share for 500 rupees. After one day, the price will go up to 520. So what I'll do, I'll give an instruction to the Dabba trader to sell the security. So they will sell it at 520. While buying, I'm not getting any share into my Demat account. There is nothing like a account or something. I just placed an order by giving 500 rupees. I'm also selling this share at 520 rupees. So that broker will give you 20 rupees profit, or 520 rupees will give you. Some other brokers will operate in a without having this buying amount, selling amount also. We don't need to give you even this 500 rupees also. Simply we'll place an order. Okay, buy this price at 500 rupees and sell this price at 520 rupees. Broker will give you 20 rupees profit. Suppose the price is going down and it went to 450, and broker will demand 50 rupees from you. That's it. We are not doing any legal something authorized transactions. It's simply like a betting on. This type of unauthorized activities also happening in our India, but it's not regulated. It's not regulated by any official body. For regulation, we have a SEBI, Security Exchange Board of India, but it's also a form of trading we have in India. We call it bucketing. Normally in Mumbai, if you go on to any tea stop also, there will be a lot of double traders will be there. It's illegal actually, but still few people will prefer to purchase and sell the shares using double trading as well. Okay. Everyone clear with this?
Yes, sir.
Hello.
Yes, Mahesh, yes.
Yeah. And we have a gray market also. Gray market is also most similar to the double trading only. But normally most of the people use this gray market in primary market in the IPO sector. Suppose if I'm applying the shares yesterday, the IPO topic we spoke, right? As a retail investor, we can apply only up to 2 lakhs. More than 2 lakhs, we cannot apply. If you want to go for more than 2 lakhs, maybe you have to use some other other PAN numbers of the Demat accounts we have to use, and we have to purchase the shares. But in this IPO, we'll approach some brokers. So we will give some deal as well with them, like I need this many shares or something. So they will purchase shares, they might apply to the IPO from different brokers, different shares also, different Demat accounts also. Once they allot shares, they will be transferring the shares to your Demat account. They will sell the shares to your Demat account. If they are not allotted, then they cannot sell it to anyone. Simply it's based on the availability and the allotment. If they got allotment, then they can sell it to you at higher price. Because you cannot apply for more than 2 lakhs, right? Still, if you want to go for more than 2 lakhs, we can apply this gray market. Some people will be there where they will apply to the IPO on behalf of you from their apps. They're different persons. They use different Demat accounts from different person. They will apply. Once the shares are allotted, then shares will be given to you. This is called gray market. This is also risky and illegal. There is no any regulations for this gray market as well. There is no a lot of manipulations will be there, frauds will be happening because there is no regulatory oversight, right? There will be defaulter choices also. Suppose you are paying some amount, what will happen? Suppose if they are not allotted any shares, if they're not giving back your money also, you will be ending up with losses only. Okay, that's the disadvantage of having gray market. Both are similar. Gray market is something related to the primary market, and double trading is related to secondary market. Everyone clear with these 2 points?
Yes, ma'am.
Yes,
Yes,
sir.
Mahesh.
Yes, Mahesh.
Everyone. Non-common students, are you guys able to understand? Ashwath, Lokesh, Dhaneshwar.
Yes, Mahesh, it is fine.
Yes, Mahesh, understand.
See guys, these points are not required for our job purpose, but still we have to keep it in our mind. Because once you go to job, if someone is talking about gray market, double trading, you should know about all these concepts, right? I'm pretty much sure Even team leaders may also not aware about these topics. I'm pretty much sure. I have learned these concepts when I have attended investment banking fund accounting courses. So I'm continuing the same pattern, same content with my students as well. I'm giving all this knowledge. That's it. And we'll talk about circuits. Very interesting topic about circuits. You know what is circuit?
Previous day's closing price of the stocks.
No. Circuit breakers. You guys heard about it? Circuit breakers.
Gap up and gap down.
No. Basically, circuit break is nothing but stock market will be halted for a few minutes temporarily. Whenever the individual security prices hit predefined levels, there will be predefined levels for every stock. Once it reaches, there is a mechanism which has been designed to provide cooling off period. We have to cool down the security market prices. So normally we will anticipate the security price will go up to 5%, 10%, 20% or something, right? What if happens suddenly the security price moving more than 50%? It is an abnormal activity, right? It's an abnormal which is hitting the predefined levels. There will be predefined level for every stocks and for every indices and for every security. If it is going beyond that predefined levels, then securities, the entire stock market will be halted for few minutes. For how many minutes it will be halted, sir? It depends upon when it is hitting that predefined level. When the prices are hitting at predefined level, when it is breaking the circuit, depends upon the timing of circuit breaking. The halting period also will be determined. There is a specific period again, 15 minutes, 10 minutes. If it is happening before 11 o'clock, if it is happening after 2 o'clock, there is a predefined mechanism in the stock exchanges. Basically, to cooling off the period during the large anticipated declines or rises in the security market prices, the mechanism has been introduced. I'll tell you when it has happened, why it has happened. We have like as of now, we have I think 5 circuit breakers. As per my understanding, maybe there will be more even. So we'll talk about major circuit breaks. The first one, you guys understood, right? What is circuit break? Suppose, guys, there is a security which is trading at 500 rupees. Suddenly, the security price started trading at 100 rupees. There is an abnormal, right? The activity is abnormal, right? 500 rupees security is trading at 100 rupees. It's an abnormal. Maybe 500 rupees max. Even in the worst volatile situation also, it can vary up to 550 rupees or 540, even 580. If it down, I mean, if it is falling down, it will fall down up to 400 rupees, but not 100 rupees or 200 rupees, right? It is an abnormal activity. For that reason, in that kind of situations, the securities will be, I mean, the trading will be halted for a few minutes. That is called circuit break. So we will discuss the circuit breakers. The circuit breaking can be happening with a downturn as well as upturn also. There will be circuit down, there can be circuit up also. Both situations will be there. But I think our Indian stock exchange is the only stock exchange experience this up circuit also. We'll talk about one by one. First one is what is the first circuit down when it happened? The first circuit reason was LPG. You
As
guys
one
know about
second.
LPG, right? What is LPG?
Liquid petroleum gas.
Huh? Liquid petroleum gas. In economic wise, guys, LPG policy, liberalization, privatization, globalization. Do you guys heard about it? Heard about it or not? P.V. Narasimha Rao, Manmohan Singh have introduced this concept. LPG, liberalization, privatization, globalization. What is liberalization? Hello. They have given a lot of relaxation to the companies. Liberalization for setting up, start the companies, industries and all. Privatization. Many companies, many government sectors have been privatized. Globalization. Other investors like foreign investors, foreign companies can also come and invest, do some investments in Indian stock exchange, Indian companies also. They can come and start their business in the India. That is called globalization. Now we are able to sell our products to the abroad also. We have a globalization. We are able to sell our products and services to the different parts of the world, right? That is all because of globalization. Understood? What is LPG policy? If you want more about LPG policy, you can go and search in Google. You'll find a lot of information. Normally, it's LPG is a 10th class and the intermediate subject. That's why I'm not spending a lot of time in this LPG policy. I'll tell you the background as well. Before 1991, basically this LPG policy came in 1991 when PV Narasimha Rao was the Prime Minister and Manmohan Singh was the Finance Minister, I think. So that time they have introduced this concept called LPG. Before 1991, India was not an open economy. There was a lot of restrictions on import, exports, and foreign investments. So in 1991, PV Narasimha Rao opened economy and allowed all foreign investments into our country. So what happened after this PV Narasimha Rao and Manmohan Singh in 2004, there was a BJP government. 2004, I think. Yeah, 2004, Vajpayee was there. So during the BJP government also, they continued the same thing. Not 2004. Before 2004, they have introduced into 1991. After some days, some years, few years, there is a government from the BJP as well. Even the BJP also continued the same policy. In what happened in 2004, Congress party again formed a government. While forming the government in 2004, Congress had a requirement of seats. I mean, the Lok Sabha seats from other parties also. If they want to form a government, they need a support from other parties as well. So what they did, they took a help from Communist Party. You know about Communist Party, right? Do you guys know about Communist Party?
Yes,
CPM.
CPI, CPM.
Yeah, what is the motto of Communist Party? They won't allow all these kind of things. Privatization, they don't agree. Globalization, they won't even agree for this globalization. The first condition they have put is we do not allow foreign investors. If you need my support, Communist Party's government's proposal is if you need our support, we have to take back this LPG policy, especially the globalization policy. You have to take back. You have to send back all foreign investments to the countries. Then only we will give our support. So Congress had no choice. So they took their support, Communist Party support, and they reversed this globalization. They asked all foreign investors to take back their investment from our country. So all foreign investments sold their equity shares in the stock market. Within a day itself, it all happened. Sonia Gandhi has announced Prime Minister, Manmohan Singh as the Prime Minister with immediate effect, and he took the remedial actions again. They have conducted some meetings again. They took some remedies to recover the market. They have done a lot of effort. That's how it all happened. But the reason is just to avoid, banning on the foreign investments to take support from the Communist Party. The first thing they did is they abolished all foreign investments in our country. With that abolition, all foreign investments started selling their investments. If they have invested many stocks in our stock market, they have started selling out because they're banning from India, right? So if they want to get back from their entire cash and everything, they have to sell their equities. There is no choice. So they have started selling their shares. So while selling the shares, panic selling also happened. Every investor from even India also started selling their company stocks. Because of that, lot of panic and lot of volatility and fluctuations is there in the security prices. Because of that, first time in India has faced downside circuit in 2004. That was for the first time. Remember? Understood? Everyone? Hello?
Yes, Mahesh.
Yes.
Fine.
Everyone understood or not?
Yes, Mahesh.
It's
Yes,
not a
Mahesh,
politics,
understood.
guys. It's not a big difficult to remember something, but
Yes, yes.
interesting.
Yes, Mahesh.
Yes,
We know about
understood.
LPG policy, right? Why they have introduced. And we know about Congress party also. Congress party not required to abolish these foreign investments. In fact, they are always welcome to have investments from the foreign investors. Because of taking support from the Communist Party, they had to take the decision. Communist Party is very local people. They always wants to avail our services to the local people only. They don't agree for foreign investments. Even they don't agree to sell our products to foreigners. Why should I sell it to foreigners? Even I don't want to. If you go to Kerala, there will be a lot of slogans also. Don't accept, don't use foreign products, use our Indian products, Desi products. That kind of slogans will be there in Kerala because Kerala government is the CPM only. CPM or Congress. One of these two parties will be there. So that's a CPM policy. For that reason, they have abolished all these foreign investments. Whenever there is an abolition, they have started selling all the equity shares. For that reason, it all happened. Immediately, Sonia Gandhi has announced Manmohan Singh as the prime minister with an immediate effect. Again, Manmohan Singh took some actions and they have arranged everything to recover the market. That was for the first time. Then for the second time, Second time is also due to this kind of things only. You know, SEBI, Security Exchange Board of India, which is the regulator, right? Normally, if anyone wants to do trading in India, even it can be foreign investments also, they were coming and doing investments with the participatory notes. You know this P notes, participatory notes. Heard about it? Participatory notes.
No, Mahesh.
No.
So normally the features of this P notes is, if any foreign investors wants to do trading in India, they have to showcase all their investment proofs. I mean, the income proof. Suppose if a foreigner is coming to our India to do trading, they have to done some KYCs. KYC in the sense, how we got this money, from where you got this money. You have to showcase all the proofs. Then only they will allow foreigners to do some trading in the Indian stock market. That's the normal rule we have even now also. But the special feature of this P note is, P notes will be issued by few countries. Suppose if I have money in USA, I'll go to Mauritius. There is a country called Mauritius. You know this? I'm not sure about the spelling. There is a country called Mauritius.
Yes,
Lot
yes.
of investments in our Andhra Pradesh also has done by Mauritius only. If you see this Amaravati project and all, lot of investments that came from Mauritius country only. The special feature of this P note is, if you go to Mauritius country with a lot of money, they will give you this P note. You can convert our money into P note. P note is nothing but promissory note. Promissory note. Sorry, participatory note, not promissory note, participatory note. With this participatory note, they can come to India. The participatory note, suppose if I'm going with 100 crores money to Mauritius, I'll convert this 100 crores to P note. P note, which is also worth of 98 crores or something. They will charge some amount and they will give you 98 crores worth of P note. With this P note, 98 crores, I'll come to India. I will purchase whatever the stocks I need. Simply, I will invest in India with this P note. I can do investments with the P note itself. That is a special feature we have in this P note. No one will ask you how we got this money, because it's a P note. That is a special feature. You know what happening in this P note? A lot of politicians, black money, everything is coming through this P note only. Did you guys watch this movie called Malana?
Yes.
What the people do? They will sell, they will send all this black money to the people. There will be a lot of brokers and their middlemen in the other countries like Mauritius and other parts of the world. There would be happening these kind of things. So they will again convert it into legal money. Legal money is nothing but this kind of notes, P notes. Again, the money will come back to India. They will do investments. The money is belonging to our Indian politicians and every Indian biggest, big shots only. And also some obviously from foreigners also coming. Our Indians will be there where they have settled in the USA and UK. So they're also participating through P notes. That's how money is coming into our Indian stock market, and they are doing investments. But they have observed, SEBI people are observing all these things. In 2007, they have banned these P notes. If you want to come to do investments in India, you have to come as a foreign institution investor only. You have to register as a FIA, foreign institution investor with the SEBI. First, you register with the FIA with the SEBI as a FIA, foreign institution investor. We have to showcase all of our KYC documents. We have to showcase the proof of income also. How we got this investment, from where we are investing, what is the source of income, everything you have to disclose as a FIA. Then only you can come and do investments in our India. That's what they have introduced in the 2007. So what they did, again, many people came and invested already in Indian stock market with these P notes, right? So suddenly SEBI has banned all these P notes. Again, they have also started selling their stocks, because India also became, the Indian stock market is also getting more tighter and more difficulty to survive in these P notes. So they have started selling all their investments, and they're taking back their investments from the stock market. Again, panic selling happened. So again, the second time we had a downside circuit because of this P notes ban. Still there is a P notes. Nowadays also there is a P notes, but some regulation is there. If you want to come under the P notes, there is some KYC formalities and all. It's not that much liberalized, but they have implemented many KYC things and all. Still, we can do this trading around through P notes. There is a possibility in Indian stock exchange. Again, BJP came. BJP is also continuing this P notes. There is a survival for this P notes as well. But it's not as much as simple as we had in the previous days. We had a difficulty even in this P notes also. That is for the second time. And for the third time, Third time, you know about 2008 crisis, right? I don't know, talk about 2008 crisis, global crisis, recession.
Yeah, recession.
So it all happened due to mortgage issue in the US government. So it all happened. I'll talk about it. We have a case studies, all this financial scandal and all everything we'll discuss at the end of the course. If possible, I'll discuss about it. Otherwise, we'll have a separate session to discuss about the scandals and we will talk about it. Okay? So because of 2008 global crisis, again we had a downside circuit. Not only in the Indian stock market, almost in every stock market of country, we had these situations. And we have a fourth time also. And I told you right, only India Stock Exchange is who has experienced the upside circuit. So the reason is I'm not sure about the exact reason, but in 2009, India market is the only market in the world which hit the upper circuit. I'm not sure about the reason. And again in the fifth time, 2020, within a day and 2 days itself, we had a two times downside circuit.
Downside circuit.
Yeah, what was the reason? 2020?
Corona.
Corona only, COVID. That was the reason. Again, on this, we don't need to talk about much. So I think in a day by day itself, we had two downside circuits continuously because of this COVID lockdown and all. So that's all, guys. These are all the circuits actually. In the circuits, trading halt will be happening. Government will conduct some press meeting and to assure the investors about state of economy and measures what they're taking by the RBI. All these things will be done by the government politicians and a lot of big regulators. SEBI will also conduct meeting and RBI will conduct some meetings. They will explain about reasons and everything. They will take some remedial actions as well. They will cut down the interest rates. All these remedial actions will be taken. Again, market will be resumed. That is called circuit breakers. Okay. Then what else we have? Square of long position, short position, and brokerage apps and TLM, trade life cycle. Today, I cannot cover these topics because the candidate is waiting for the interview. You have to prepare for the interview. Okay. Maybe we can write up here. I thought today we can complete the entire secondary market, but it's not very possible, guys. And maybe from next week, I may extend timing as well. I'll try to take from 7 p.m. to 9 p.m. also because I have to cover the syllabus. If I'm going to take only 1 hour, 1.5 hours, definitely it's not possible for me to complete the entire syllabus. Maybe I'll search for 2 hours or 1.5 hours as well. Are you guys comfortable with that? We'll take some break as well. We'll take some
No
break
problem.
also. Okay.
Okay. No
Simultaneously,
problem.
we'll try to cover the fund accounting class and investment banking classes, and I have to take the Excel classes. All these things I have to take, right? That's right. Let me stop the recording.